Whether you're in the midst of open enrollment at your job or you're going it alone, picking the right health insurance is all about knowing your needs as well as the needs of your family if you're selecting coverage for them. You should start very simply by sitting down and making a list. Consider not only the coverage you need right now, but also what you might need in the future. Answer these questions. How often do you see the doctor and for what? Are you planning to have children soon? Do you take a lot of prescription drugs? Do you need dental coverage or coverage for contact lenses or glasses? Do you want a plan that pays for routine costs, such as yearly checkups, or just a broad safety net to pick up the tab for surgeries and major hospitalizations? Is there a particular doctor you want to be able to continue to see? Do you need mental health benefits? Are you covering only yourself or are you covering your family as well? Do you need easy access to specialists, such as a chiropractor? Once you've worked through these questions, you can start looking for plans that match the answers. Most large companies will offer 2 or 3 plans to employees. If that's true of your employer, you want to go through each one and see where you're going to get the most from your contribution. Compare premiums, coverage amounts, and out-of-pocket costs, including deductibles. The goal is to pay as little as possible while still getting the coverage you need, so you need to do a little cost-to-benefit analysis. HMOs, or health maintenance organizations, which require you to visit in-network doctors unless you want to be charged a hefty copayment, are generally the least expensive. If you are single and your visits to the doctor are few and far between, this could be a plan for you. PPOs, or preferred provider organizations, still involve a network of doctors, but it's easier for you to visit specialists because they don't require referrals. If you or your family go to the chiropractor or dermatologist regularly, this kind of plan is likely worth it. And high-deductible plans linked with an HSA come with inexpensive premiums and greater flexibility. They're good for people who have negligible health expenses. You'll pay out of pocket from your contributions to the HSA until you reach your deductible. Smaller companies, however, may offer only one plan, but that doesn't necessarily mean you're stuck when it comes to cost and options. If your coworkers feel that the plan is lacking as well, you can talk to human resources, or in most small companies, the owner or manager, and ask if they'd be willing to add or change benefits the next time they negotiate the contract with the insurer. Sometimes, in the case of a small business, if the employees agree on a change, it's easy to lobby for it to be implemented as long as it doesn't cut into the company's bottom line. Or you can go it alone. Whether you work for a large or small company these days, it pays to compare the amount you're being asked to chip in for coverage with the amount it would cost you to go on your spouse's plan, if that's an option, or buy an individual or family plan on your own. Buying an individual policy is something especially single parents should consider. The coverage at most companies is typically single coverage or family coverage with no gray area. But you do have options here as long as you're willing to do a little legwork. With the family option offered by most companies, the premium is the same no matter how many children you have. A great deal if you have 5 children, but not so good if you have only 1. So shop around on your own. Start at ehealthinsurance.com. and see if you can find an individual plan for your child. You'll likely be able to find something inexpensive provided he or she doesn't have a pre-existing condition. Then you can sign yourself up for your employer's plan as a single. If your child does have a pre-existing medical condition, you should still shop around, but you may find that it's cheaper to go with the family policy offered by your employer. Also, if you fall into a low-income bracket, you may be eligible for free or low-cost health insurance for your children through the U.S. Department of Health and Human Services. The eligibility rules vary by state, but in most states, uninsured children age 18 or younger whose families earn less than $34,100 a year are eligible.